It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another Friday that has dropped on the Real Estate Breakfast this morning, your Australian property radio podcast, as we talk all about your local and national trends. Remember too, you can leave us a voice message if you would like to. Let us know if there is anything in the current market that is particularly worrying you. You'll find the leave a voice message below in the show notes. I got to say, thank you for some of the emails that have come through in the last couple of days. Haley, Marianne, and Stephanie, thank you for your kind words to get better. And Don in Footscray in Melbourne, who listens every morning for his granddaughter, who he is trying to get into the property market. Don says, harden up, Craig, it's only COVID. I'm 73 and I sailed through it. Good on you, Don. You're a legend. They do breed them tough in Footscray. Nice to have you listening. And also, let us know how you get on with your granddaughter. And thanks again for all of those messages. It is a Friday, October the 10th. What has been in the news this week? What have we been talking about? The first home guarantee scheme that has been making headlines this week following the rollout. This is, of course, for the major changes that came into effect on the 1st of October. You know, so many people have been waiting for months on end for the first home guarantee scheme. Yesterday, we spoke to Nicola Powell from Domain, who gave us the breakdowns on the key markets. Today, we want to just go one step further and talk to Anthony Landau. He's the Managing Director and Mortgage Broker at Equilibria Finance. He's really in the thick of this, working daily with both clients and lenders. And good morning to you, Anthony. Welcome back to the Real Estate Breakfast. Yeah, it has been one of those weeks. As I say, you're in the thick of this with the first home guarantee scheme, which a lot of people have been waiting to sort of come and arrive.
Yeah, good morning. Great to be here, Craig. And yeah, look, it's just about in every newspaper and every news run at the moment, different opinions and thoughts and pros and cons about this revamped first home buyer guarantee scheme that rolled out on the 1st of October. So it's a hot potato right now, no doubt about that.
So let's begin with a quick recap on how the scheme works for those that are still catching up with this and who is eligible.
Yeah, fundamentally, the scheme works where it assists first home buyers entering the housing market by allowing approved applicants essentially to take out a mortgage with just a 5% deposit. The scheme's been around in different forms since the Morrison government, but the revamped scheme announced by the Albanese government in their last election campaign and rolled out on the 1st of October essentially lowers the barriers to entry with two main changes. The first main change is changes to the price caps, quite significant changes to the price caps. So New South Wales capitals, the price caps changed from 900,000 to 1.5 million. In Melbourne, from 800,000 to 950. Queensland, 700,000. That price cap's gone up to $1 million. In Perth, from 600,000 to 850,000. Adelaide up to 9,000. Hobart up to 700,000, and the ACT gone up from 750 to $1 million. So those price caps have raised significantly. The other major change is there's now no income cap. So first home buyers on any incomes with a higher income stream, for example, can now also access the scheme. Essentially, the scheme now is a lot more accessible for a lot more buyers at higher price points.
Yeah, it's a total game changer. And as Nicola said yesterday, you know, the property price cap going up to 1.5 and the time to save, like, you know, comparing it with 20%, which was 10 years and 3 months. Now with that 5%, 2 years and 10 months, and you're saving 7 years, 5 months. I mean, I said yesterday, that is a phenomenal amount of time that you are saving and you're in the market.
Massive change. One of the biggest challenges for first home buyers is saving for a deposit. only requiring that 5% deposit, bearing in mind as well, depending on some of the thresholds, stamp duty may still apply. There may be some other on costs that first home buyers need to stay across. But essentially now, a first home buyer, as Nicola intimated at, can save for a deposit in 2 years and 3 months, down from about 10 years. That is a massive difference.
Okay, so let's drill down on the first home buyers, because this will be interesting for our listeners. You are in the mortgage space. You are dealing with this day in, day out. So how will these changes help first home buyers?
Obviously, it will enable first home buyers to access the market with a lower deposit. Secondly, there'll be no lender's mortgage insurance charged. Rubber hits the road there quite significantly. For example, someone buying a $1 million home with a 5% deposit would avoid an upfront lender's mortgage insurance premium of around $34,000, which is not insignificant. Or if you're buying a home up to $1.5 million in Sydney, you'll avoid around $75,000 in lender's mortgage insurance. So it really is a big benefit for those trying to access the market on those two fronts.
We should also talk about the downsides or the potential risks for those looking to buy in, because, 5% deposit, it's a hell of a lot more, Anthony, that people are going to be borrowing.
Yeah, the downsides are often overlooked in all of the media headlines and stuff like that, but they're really, really important considerations for the first home buyer. We work through these downsides. We work through these with our clients to understand them. The main two downsides from an economic perspective is you're getting a 95% loan. Yes, you need a lower deposit, but you need a higher loan. So you will be borrowing more money. We need to demonstrate you are able to service that loan and make those repayments, but you will have a higher loan amount. And with some providers, that higher loan amount may also come with a higher interest rate at a 95% loan to value ratio. So you'll be paying more interest over the life of the loan. A second really important consideration is you will buy a property with less equity to start with. So if there is a market downswing, if the value of your property drops, you could fall into potentially negative equity, where the loan is in fact more than the value of your property. We obviously know in Australia that the housing market tends to trend upwards, but it is just something that home buyers need to consider, that your loan will be 95% of the value of that property.
And that is Anthony Landau, who is with us on our Friday morning. Good stuff, because we're getting it from a mortgage broker. When we come back, we're going to talk about how this could all impact on the broader market for both homeowners and investors. And also want to sort of talk about the fresh wave of demand that will also be coming. So we'll talk about all of that after this.
Have you missed one of our episodes? Whatever you are looking for, you'll find it right here.
Yeah, so if you have a look at southwest Sydney, that does lead the house price growth. 10% it is up to 1.21 mil, while Parramatta follows at 8.8%. And surprising, the outer southwest also saw the highest unit price growth at 6.7%. So there seems to be pretty good appetite in those spots.
Yeah, absolutely. So I think people are potentially trading off some of those premium kind of locations and looking further afield to see what they can get for their given budget. And that's a kind of increasing competition in some of those cheaper pockets, which is pushing up prices there. I think we're also seeing kind of more buyers take advantage of some of the first home buyer schemes as well, which is increasing their kind of capacity to pay to some extent. The schemes such as the Help to Buy, and they're also benefiting a lot from those lower interest rates as well.
Every morning from 6 a.m. across Australia, we deliver you the latest property news, commentary and predictions from Perth to Cairns and from Melbourne to Brisbane, 7 days a week.
And it is a Real Estate Friday. Nice to have your company as we wind off today and look ahead to the weekend. We are talking all things First Home Guarantee Scheme. How could these shifts potentially impact on the broader market? And I'm talking about for both homeowners and investors.
Yeah, this is an interesting question. The government's suggesting we might see a 0.5% increase over 6 years. I really think that's head in the sand stuff. this is only going to stimulate demand. And to be honest, we've already seen an uplift in demand, not only from first home buyers, but from investors trying to get in front of the perceived pricing increases that are going to come with this increased demand. They're trying to get in front of the market. The other thing we're seeing with investors and home buyers is by lifting up the thresholds, we're seeing more investors and first home buyers fishing in the same pond for properties. So this lower 25, 30% of the market is where we're going to see a lot more demand and a lot of activity. I believe we're going to see price increases in some of those lower quartile markets of maybe 5 to 10% over the next 12 to 18 months as we get this upsurge in demand from not only first home buyers, but investors trying to secure a property.
Yes, and if you missed our conversation with Nicola Powell from Domain, one of the markets I found interesting is Darwin. Now, if you're buying with that property cap of $600,000, you are going to be able to save your 5% deposit in just 11 months. Now, how much of that dual disposable income do you need? Well, you need over $156,000. That's a very short turnaround, isn't it? 11 months, Anthony.
Yeah, that's a big difference. I mean, to put it in numeric terms, a 5% deposit at that price cap in Darwin of $600,000 is now $30,000. So that's down from potentially needing a 20% deposit of $120,000. So a massive difference in terms of people being able to access the market with a hell of a lot lower deposit in a much shorter time frame.
And the other standout one, if you are in Hobart this morning, you've got your property price cap at $700,000. That has gone from almost 6 years all the way down to 1 year and 7 months with a combined dual disposable income, $106,000 and change. Again, that's pretty achievable for most people.
It is achievable. I mean, the price cap in Hobart's $700,000, so 5% deposit is $35,000. A 20% deposit is $140,000. So it not only means it takes less to save for a deposit, it also means there's more people who will have a deposit, which again comes to this issue of demand. In Sydney, the price cap is $1.5 million. That deposit now at 5% is $75,000. Beforehand, at 20%, you were looking at needing a deposit of $300,000 or paying lender's mortgage insurance. So it makes it a lot quicker to save for a deposit, but it also means there's a lot more people who are able to enter the market with that size deposit. Back to our point around stimulating demand and driving up prices, particularly in those more affordable areas. I think that'll be nationwide, not just in that major market in Sydney.
A lot to think about. Enjoy your upcoming weekend and catch you back here soon. Same channel, same time.
I'll be back, no problems at all. And just a quick comment for first home buyers, talk to your mortgage broker. Make sure you understand not only the benefits, but also what it's going to cost you using this scheme.
Whether you're a seasoned investor or a first-time buyer, know your property with us on the Real Estate Podcast.
And it's really, really interesting in terms of just how much time you are saving to now save for that 5% deposit. So let's go to Sydney and I'll let you explain that.
So when you look at the home guarantee scheme, it allows people to purchase with a 5% deposit and the government becomes a guarantor of the 15%. So it means that you're avoiding lender's mortgage insurance. Now, we know that when you're a first-time buyer, saving for a 20% deposit is such a significant hurdle. And if we take Sydney as an example, and we're using the property price cap based on this home guarantee scheme of $1.5 million, to save for a 20% deposit on that $1.5 million would take just over 10 years for a two-person household income. When you're looking at saving for 5%, it only takes 2 years and 10 months. So you're saving almost 7 years in terms of time it takes to save that all-important deposit.
We connect you to the best real estate information across Australia. The Real Estate Podcast.